Hey everyone, welcome back to our news trading session. And obviously it is going to be a very interesting month, and there's a lot of development going on in the market. If you have been following what's going on, obviously we have that dispute between Trump and Elon Musk at this point in time, as well as the tariff deadline and whatnot. Audio seems to be good on my side, and we'll continue as well as to give you guys a little bit of the the macro outlook in terms of what the NFP numbers, how is it going to play out, is it going to affect the market long term or not. I'm going to just put it out straight for you guys. It will move the market, but I don't think it will actually have a very lasting effect unless we get a number that's really off at this point in time. All right, so let's get this started with a quick disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. Obviously, news trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, which leads to high trading risk and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. Obviously, there's going to be a bonus CW deposit bonus, and I'm going to show you the code after this. And you should have access to the private Telegram channel if you have attended our sessions previously, or if you're new and you registered through Octa's website, you should get an email to join the Telegram channel. I really think if you're trading with Octa, you should have access to the private Telegram channel. There's a lot of information there, and just to give you guys updated on what's the current market situation. So, I think it's a good channel to be subscribed in. Anyway, this is the code, it's Nonfarm 2025. This is $2 deposit bonus. I believe this is a one-time use code, so just keep it until you want to use it. And when you want to deposit into your Octa trading account, make sure you use the code. It's Nonfarm 2025. And it is going to expire in about 6 months' time, which is on the 31st of December 2025. That's how quick we are sailing past 2025. A lot of interesting stuff. All right. Just a little bit about myself. My name is Forex, and I've been a full-time trader with over 20 years of experience. To be exact, it's actually 23 years. And I've been a professional trading coach as well as technical analyst since 2007. My expertise is in Ichimoku Kinko Here techniques, and I do run my own company, which is an independent market consulting company as well. I've been invited as a guest speaker at Trading Investing Expo across Australia, Investfair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analyst Associations. All right. So I'm going to go through some theories very quickly, just keep you guys updated on what's really going on. What are you guys looking at, especially if you are new here. And it's always a good refresher to kind of figure out what is actually the values that we're looking at and how does that have an impact into the market. Now, the non-farm payroll numbers, if you are looking at your economic calendars, there are actually two non-farm payrolls. Number one is the ADP non-farm payroll. ADP non-farm payroll, it's really more on the private sector. It's not government-based statistics. The one that we're looking at tonight, it is government-based statistics, and the department that collects it is obviously the Bureau of Labor Statistics. Now, it's basically just a federal agency, which is a government hand that collects all this data. Basically just disseminates the numbers, just compile it for you guys and, give you guys what the economic outlook is. It is a little bit complicated right now because I think there are reports going on that the Trump administration is actually holding back a few data, especially in terms of the farming numbers. But, we're looking at the non-farm numbers tonight, so it's actually kind of excluding that farming numbers as well. But it is kind of questionable, right? It is kind of questionable right now. I think a lot of Americans are actually, trying to figure out what is this, how the impact on those government job cuts are going to have an impact on the Bureau of Labor Statistics. Because once the government gets this wrong, this is something that could actually ruin the way we look at things going forward into the future. But for now, it's kind of still safe, all right? Okay, anyway, BLS doesn't collect just the employment numbers as well. They do the inflation number, which is something that we're going to be trading live next week as well. We're going to be looking at the CPI on the 11th, and then the PPI is just also going to be released next week as well. Now, Obviously, with the labor market data, the two numbers that we are focusing on, it's actually the NFP numbers as well as the unemployment rate. And obviously, this is, the bigger movements in the market. Those are going to be the two headlines that will move the market initially. Then everyone's going to take a look at a breakdown of those numbers, which I'll show you tonight because it is a little bit interesting to look at as well. Okay, so with these numbers, anything that's released by the Bureau of Labor Statistics, they're scheduled releases. There's no surprises in the market, and every year, when they start the new year, they actually publish a calendar. So it's very hard for you to miss this. And in fact, if you go to the BLS.gov website, you can actually add this calendars into your phones, right? You can add it to your I don't know. I don't use Apple, but if you want to use the calendars on Apple, Google, and I believe Outlook as well, you can actually click a link on it on the website, and it actually adds it to your calendar. So it's near impossible for us to say, I don't know that the NFP numbers actually can be released today, for example, at what time. All right. But just to give you guys a little bit of a heads up, the way we look at it, the unemployment rate, the labor data we're looking at, and the non-farm payroll, it's usually released every first Friday of the month. And if it falls on a holiday, publication usually postponed to the following week, occasionally to the Thursday of that week. I think the rule is not there anymore. I think the past 3 years or so, I think the only time that those releases are postponed is typically in the month of March, because February it's usually a shorter month. But yeah, that's how we look at things. But I think in the past few years, I'm not sure that even if it falls on a holiday, for example, if it falls on a Good Friday as well, it still gets published on that Good Friday. So just something to keep an eye out as well. All right. Okay, so the NFP numbers, it's basically a monthly release by the US Bureau of Labor Statistics that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employments, as well as nonprofit organizations. And the ADP report is a separate report as well. Just to give a little bit of an insight into this, the ADP numbers and the NFP numbers that's released by the the BLS, it doesn't have a lot of correlation. And historically, coincidentally, it might seem like the ADP is a leading number. It's not a leading indicator at all. So it's a completely different thing. And I've been trading for 23 years, and do the maths, 23 times 12, that's a lot of, labor numbers that I have looked at. And I can assure you that the ADP NFE, or the private employment numbers, are not going to be a good indicator of what the NFP number is that is actually compiled by the Bureau of Labor Statistics. All right. I'll take a look at the market later on, whether it's actually bearish or bearish, a little bit closer into how we're going to position ourselves into the trade. But don't worry about it too much. We're going to make that final adjustments very close to the release itself. All right. Let's talk about the NFP numbers, and the number that a lot of traders are going to be looking at, or basically in terms of economists, analysts, we are looking at a number of 200,000. That's basically the number that we are looking at. If we get 200,000, that's a good number. Anything higher than 200,000, that's a very strong number. And this is kind of just generalizing on a lot of stuff, right? This is actually not that accurate. The market can move a lot depending on the context of the market itself, right? Whether or not people are actually looking at the numbers to be good, or whether or not the numbers are actually going to be bad. A lot of this is actually more of a continuation from last month's number, right? So for example, if last month's number is actually at 250,000, and if the market consensus is, let's say 150,000 this month, right? Is that going to be a bad number? Well, it seems like it is going to be a bad number, but if the last month's number was actually revised down, for example, the initial release was 250,000, and then the BLS said, oh no, we made an errors here and there, and then they adjusted, and then last month's number was 120,000. You know, the gain in 150,000 this month, for example, that's actually a good gain, right? So we need to look at the context of the market as well. What was the previous number? Was there any revision? And does the, you know, the market needs it? And the reason why we're looking at the NFP numbers is obviously looking at the labor numbers, right? Are we going to be looking at, you know, people losing their jobs, or, you know, is the unemployment rate going down, or a lot of people getting jobs in the market? Those are the kind of stuff that we look at, because end of the day, it's the FOMC, all right? That's basically the key to everything. At this point in time, if we take a look at what FOMC's dual mandate is, number one, it's the labor market, just to keep it strong. And the other one is actually price stability. When they talk about price stability, we're talking about inflation number here, okay? So those are the reason why we're looking at the NFP numbers. Now, the NFP numbers, because it's non-farm related, non-farm contribution to the market it's very important, right? Because it does contribute a lot more to the GDP numbers. And this is the reason why we're looking at the non-farm payroll as a very crucial indicator of the state of the US labor market. And it does have an impact onto the financial market as well. And very differently from how we look at the unemployment rate, where we actually take a sample survey, the non-farm payroll, this is something that's actually added on every single month, right? So for example, if last month's number is 250,000, and then this month number, I think the expectation is about 130,000, it's actually not that bad, right? It's not like all of a sudden there are no jobs in the market or anything like that. It's just that, okay, here's a new payroll for this month. It's just a you know, additional jobs added into the market. And that's the reason why I think there's a lot of confusion in terms of why people look at the NFP numbers wrong, or, you know, sometimes when they look at the NFP numbers, oh, the number is bad, but the market is positive on the US dollar and whatnot. You know, sometimes it just doesn't make sense, right? So that's the reason why we're doing this sessions, to just give you guys a little bit of a context into what we're looking out for, okay? So obviously in the Forex market, we're going to be looking at currencies that has the, or pairs that has the US dollar in it. The Euro USD, the Sterling, the Yen, the Canadian, the Swiss, you know, those are going to exhibit high volatility in response to report releases. The crosses, for example, the Euro Pound, the Aussie New Zealand, the Euro Yen, the Sterling Yen, they don't have an immediate impact. Sorry, the NFP doesn't have an immediate impact onto the cross currencies, but it could influence them as well. Wouldn't rely on it too much, because we're looking at that extreme volatility to have an impact immediately into the market. Because the way we trade this news is that we really trade more on how the market reacts to those news releases, right? So we are going to be covering this series. We will do that on Monday next week. For those that have never attended it, feel free to come in and join us on the 9th. Same time, it's just going to be on Monday. And, you know, I'll explain to you guys how we look at the market there. It's, when we talk about news trading here, the sessions that we do, it's not really fundamental. It's not really technical as well. You know, it has its own strategy, okay? So we're going to look at a couple of strategies, and I'll explain to you what's going on. I think the market has already started moving. I think there's already a lot of confusion in the market there. I'll give you a look into what the general outlook is, but we will trade it live, and we'll try to figure out whether or not we can actually fade it. So we'll try a couple of stuff, okay? All right, so I think we talked about this, so we can skip this. Now, the second number that we're going to be looking at is the unemployment rate. Now, the unemployment rate is calculated in percentage. It is published at the same time as the NFP numbers as well. That's why we say we don't really call it the NFP numbers. We actually call it the labor numbers, because we do look at a lot of stuff, not just the NFP numbers. And this is the other part of the equation when we have a good unemployment rate. So we want the unemployment rate to go down and the NFP numbers to go up. Those are good labor numbers, right? And this is where a lot of the confusion happened. For those, you know, I even saw some financial influencers, whatever, creating those YouTube, doing live trading session, thinking that they understand what's going on. That we're actually looking at this and say, oh, the NFP number goes up, the unemployment rate goes up, you should be buying the US dollar because everything goes up. No, that's just really not understanding how to read the fundamentals. If the NFP number goes up very significantly, the unemployment rate, to have the same positive impact, the unemployment rate needs to go down, right? Because the unemployment rate, the lower it is, the better the economy is doing. The higher the unemployment rate, I mean, there's a problem in the market there. So if the NFP gains, but the unemployment rate gains as well, that's going to be what we call a little bit of a mixed data. And this is where it gets very confusing, right? So should we focus on the NFP number? Should we focus on the unemployment rate? Or should we focus on anything else at this point in time? Really depends on what the FOMC is looking out for. And for this year, through the guidelines that the FOMC has posted in December, and the last one was in March, we do have that guideline from the FOMC that, they have a cutoff in terms of when they need to act with urgency, and that would be the unemployment rate at 4.5%. So, we're looking at the unemployment rate coming in at 4.2, 4.1, 4.3. It's not going to have that impact because the FOMC has already come out and say, look, if it doesn't hit 4.5, we're not going to be doing anything. We created that ceiling. That's basically the limit that we have. So that's basically the FOMC saying, all right, this is my stop loss. If the unemployment rate hits about 4.5%, then we need to start cutting interest rates. Until that happens, they're not in a rush to be cutting interest rates. Okay, so there are times when these numbers are going to be there, but if we have that forward guidance from the FOMC, it makes things a lot easier as well. Now, the FOMC is not being difficult. The market is being very difficult to read because, obviously we have Taco Trump doing his stuff in the US, right? We basically had a little bit of a, back and forth here and there. And we don't know what's really going on. All right, we got that Geneva deal with China, and then obviously they start he starts accusing that China is violating the deals, and then China hit back. He started calling China again, and at the end of the day, this morning, he said like, oh, everything is good, everything is cool, but we haven't heard anything from the Chinese government apart from saying that Trump called President Xi this morning in Asia. So we don't really know what's going on, and the whole stuff with Elon as well. And this is obviously the factor that the reason why the FOMC is being a little bit more cautious, and just waiting there on the sideline to see what's really going on. Okay, so that's the kind of the macro context into the whole thing. So if you guys are wondering, okay, should I be focusing on the unemployment rate? Should I be focusing on the NFP numbers? It's both, right? You need to understand both. And we need to understand the importance, because if I don't give you that context that the FOMC is looking at 4.5, then it's actually going to be very hard to navigate the market tonight. Okay, so obviously these are statistics. You guys can read through this if you want to, but I'm just going to go through very quickly. The other numbers that we're looking at is the average hourly earnings. This is of zero importance at this point in time. It's so irrelevant at this point in time because there's a lot more focus on what's going on. Even at this point in time, the reason why I said at the very beginning is the NFP numbers and the unemployment rate going to have a very long-lasting impact into the market. It doesn't. It will move the market in a short period of time. I don't really want to open a trade and then hold on to it for days or weeks. We just want to get in. We just want to get out as soon as we can. Because what we're going to be looking at, it's really more of a short-term reaction to the market. It won't have a long-lasting impact unless it goes beyond, the limits that the FOMC has, right? So obviously there are a couple of strategies to look at this. You got your pre-NFP trading. So pre-NFP trading is basically opening up your positions this week on Monday or Tuesday, and then closing out positions just before the NFP number is done, right? The other thing that we do normally is a straddle strategy. So we do it the buy stop and the sell stop. This is only applicable if there is a range in the market. If there's that period of consolidation, then yeah, we can use the straddle strategy. We can trap price, right? So the initial market reaction, you can see that the market pushes in one direction, and if it goes there, it triggers your buy stop, then yeah, you can get in at the time of the release, and then you can figure out whether it's right or wrong. Just make sure you close the other positions if one triggers, right? The problem with this one here is that if the market is too choppy, or it doesn't have that set outcome where we are looking for that consolidation period, then it's actually impossible to use the straddle strategy. So if the market is not moving in a range, then we're not going to be able to use the straddle strategy, right? So just keep that in mind. Okay, and then there's the fade. We are probably going to be looking at the fade tonight, which is really something that we need to time very, very quickly on the 1 minute time frame. So fading the move typically happens within the first 50 minutes of the release, whether or not we can actually reverse the movement. Because with NFP, if you take a look at the movement minute by minute, typically it goes in one direction, goes back to the original range. Sometimes it goes back to the initial breakout. Sometimes it might actually reverse the position. So we're probably going to be doing the fade tonight, right? Post NFP trading, it takes time. I'll probably give you that outlook more on Monday when we decide to, okay, we'll take a look at the position, we'll take a look at the data, everything accounted for, and then we'll do some post NFP trading. All right, I want to give you the numbers that we're looking at. Previous number for the NFP numbers is 177,000. The forecast right now is at about 130,000. Consensus for the forecast here at 130,000, I believe. Let me give you the percentage here. For the NFP numbers, the current range estimate, it is at 130,000, right? The numbers will fluctuate between 110 to 150,000. Those are actually the current range. A lot of the consensus is now clustered at 130,000, and that's the reason why we're looking at 130,000. If you open up another economic calendar, it might actually show you 127,000. I think the latest one, people are actually looking at 125, 127, 129. So obviously the market is expecting the NFP number to be a softer number. The unemployment rate is all expected to be at 4.2%. I think about 83% of the consensus is currently looking at 4.2%. And not a lot is looking at a drop in unemployment rate. I think there's a higher percentage, I think about 13, 14% for the numbers to potentially come in at 4.3%. So there's a possibility for a higher unemployment rate, but I think a lot of analysts out there are not looking at a lower unemployment rate. Okay, now the thing with the numbers that we have here, if the unemployment rate goes up, what's the limit? Is it going to be like 4.3 or does it jump to 4.4? If it jumps to 4.4, then obviously the FOMC might say something about it, that they might be on the ready, on the standby there because it's approaching the 4.5% limit. But if it's only just 4.3%, then it's not going to have a huge impact. Or the FOMC is probably just going to tell the market, hey, calm down. We still have that 4.5 that we have for our roof there. So that's basically our stop loss, and we're not quite there yet. If the unemployment rate suddenly drops to below 4%, you're probably going to be looking at Trump posting on his Truth Social that, hey, the labor market is good, right? Mr. Too Late is not there cutting interest rates. So that could be something that comes out. The NFP numbers at this point in time, again, we're looking for a softer number here, because if we're looking for a softer number with the NFP numbers, then yeah, there's a higher probability that the unemployment rate could actually go up with it as well. Now, the rest of the data that we have here, typically I don't show it to you, but tonight, obviously, a lot of the focus is actually going to be on the government payroll. So let's take a look at these numbers as well there. What are we looking at? Because if we take a look at the previous number is 10,000, people are actually looking at that negative cuts, and the forecast for this month, the release, which is actually May's number, is that we are looking at that negative 10,000 government jobs being cut off. So this might actually move the market. Again, if you're not familiar with fundamental analysis, obviously this is going to be off beyond your scope. Okay, all right. Let's take a look at the market here. And the Euro USD, we don't have the corridor of volatility that we are looking out for. You can see the market is actually not in a range-bound market condition. It is actually, the underlying on this one here is actually creeping to the upside if we take a look at the time frame on the hourly time frame. So the sterling here, again, if we take a look at it on a 50-minute time frame, we don't actually have that corridor of volatility as well. Same thing if we take a look at it on the hourly time frame. This is actually well supported, that there's actually a good support that we have here. In fact, there's actually two trend lines currently supporting sterling at this point in time. So overall, all of these are actually very well supported. And with the dollar yen here, obviously this is trying to recover, but it is being cut off a little bit here. So if we zoom out here, there is actually a potential for you guys to do a buy stop on the dollar yen. It is above 144.50. So I would actually put a buy stop on this one here, a little bit higher, about 144.55 or maybe 144.60. That's one buy stop, but I'm not going to be placing a sell stop on the dollar yen. So this is the one trade that we're going to be looking at. All right, data is actually going to be released very soon. We've got about 2 minutes. So I want to talk about what's really going on the Euro USD here. We are currently looking at a little bit of a downward pressure here. Indications is that for this one to potentially lead to a downside here. But again, we will react to the market here. If the market is currently pointing to potential downside, obviously there is a potential for this one to break a little bit of a support that we have here. But if we take a look at the market here, it's already breaching that level. So I don't think this is an ideal level to start opening up positions right now. So I'll take it slow. We got dollar yen being planned here, and just waiting for the numbers to be released now. Should be soon, right? But yeah, Euro USD, sterling, I'll wait for a little bit. I'm not really in a rush to start randomly opening up a position. If you take a look at this one here and say, oh, but there's a little bit of corridor of volatility over here, it's not, because technically this is still being guided by this resistance trend line here. And if we got that resistance trend line, we got that support trend line, zoom out, it seems like it is actually in a little bit of a triangle here. It's just that not that obvious yet. Okay, so we'll wait a little bit. There's a little bit of a redraw going on here on the chart, a little bit of flashing there. But numbers are actually going to be released. Now for gold, just be on a little bit of a standby here. This one here, it is a little bit choppy, but typically we don't really rely too much on the straddle here for gold. It does move differently as well, because on the demand for safe havens and whatnot really depends on what the sentiment is on the market. All right, so just waiting for that numbers there. Anytime now, we should be looking at a lot of movement in the market. But dollar yen, we got that one buy stop, and that's pretty much it. That's all we can do right now in terms of the order, and it is actually not a straddle at this point in time. All right. All right, we saw the market punching through, and the numbers are, NFP number is actually higher than consensus, 139,000. Previous number 170, revised down to 147,000. Overall, I think this is okay. It is a pretty good number. The unemployment rate, it is at 4.2%. The government payrolls, negative 1,000 instead of negative 10,000. So overall, I think we get a much better numbers as well. Private payrolls has also come in above consensus, a little bit lower than the previous numbers as well. All right, so what can we do here? Let's take a look at whether or not we can start fading this. Obviously, I need the reaction on the first minute here. The dollar yen is already breaking out to the outside, but I don't think this is actually going to be long lasting, so we'll see. If I got any reversals or anything like that. The current movement on the dollar yen is currently okay. We're not looking at any reversals. The Euro USD still points to the downside here. And I believe we just got a trigger on the Euro USD. Just waiting for the 1 minute to close, obviously, and then we'll take a look at what we can do here. So just waiting for this one here. This one is currently breaking out through, and I want to start fading the euro soon. Just waiting for a little bit of a confirmation if we can actually start fading this. Just waiting for everything to just kind of calm down a little bit. Now, the dollar yen, I think we got triggered a little bit higher. We got triggered at 69. I think we placed our stop loss, stop order at 60. Got, obviously, with releases like this, sometimes we get dragged up a little bit more because the spread widens, or sometimes liquidity just kind of dries up. We got a little bit of a slippage, but it's reasonable. If we take a look at the order there, 10, 144.60. This one got triggered at 69.6. I think that's pretty reasonable at this point in time. All right, I'm just waiting for a few things to happen here. I'm just waiting to see if there's any sign of reversals happening in the shorter time frame. The hourly the Doyen is still okay. We might actually be able to scale in, but I'm not sure if there's a reversal sign that we might actually have to reverse the position. Gold, as I said, this is not really going to be that impacted as much. You can take a look at this one here in the 50-minute time frame. We are just not going to go anywhere with gold. It's just very choppy as it is. And the market is obviously still reacting. You can take a look at the changes there, pretty significant there. All right, Euro pulling up a little bit. I'm just waiting for any confirmations if we can start, going back in reverse, see if we can fade the current move there. But yeah, if we take a look at the numbers there, is it a super positive number? It's actually not. Even with a downward revision from 170,000 to 147,000, it still comes in lower than last month. It is hard in consensus at 130,000, right? We got the number at 139. It is hard in consensus, but overall, I think we are getting a softer number from last month's release there. The reading material resources that you put out, where can I get it from? I would like to read through it myself. Well, I normally use that material there for our session, so you can pause on YouTube and kind of read it out. But yeah, see if we can get that from the. See, I'm not quite sure if that's something that the team distributes for clients here at Octa. All right, getting a little bit of a reversal signal happening here on the Euro USD, so we might actually take that, see if we can get. And we need to kind of close the dollar yen as well. I think we're starting to get a little bit of a fade happening in the market. Market is probably going to pull up a little bit, so we might actually time for a much better entry. But I'm looking to minimize that damage here on the dollar yen. We might actually close it a little bit closer to 144.60 if we get up to 144.60 again. Not quite sure. But yeah, I'm happy to kind of close up the position there if the market pulls back up to 144.50, 60, right? Euro, just waiting for a little bit. You can see that candle there. This is on the 50 minutes time frame, and you can see the whipsaw that's been going on here. It basically just takes the bottom of the range and it just whipped the top of the range. This is not a good fade. What we're looking at is that it's just taking in the stops here and there, right? But it is being pressured to the downside here. But dollar yen starting to recover, and I want to wait for a little bit, see if I can actually kind of close it up at break even, in fact, on the dollar yens here. So just waiting for this one to pull back up a little bit. All right, and I might close it a little bit lower. Yeah. About 144.60, I would minimize my risk there. If it goes there, then yeah, I would take that. The stop loss that we have here is obviously. Sorry, I just need to create a little bit of a stop loss here, and I wouldn't go any more than 144.95. I think that's already beyond what we have here. So what we're trying to do here is not really taking long position on the dollar yen at this point in time. I think we're getting a little bit of a choppy signal happening here. Could be a fade in the market, but I'm not taking the fade that we're looking at here. I believe the dollar yen on the longer term still points to the upside for the dollar yen. So if I take a look at it on a higher time frame here, I think this is still on progress to a little bit of a higher number. Potentially back to about 145 here on the dollar yen. So, the way I do this is that we want to get in and out quickly, right? Because there's no point in holding on to positions, hoping that it would actually be more of a little bit of a swing, and if it can actually go to 145. At this point in time, I'm just not looking at that momentum there. And again, from the outlook that I say, with the dollar yen, we have to be a little bit more careful on expecting the US dollar strength at this point in time. And that's the reason why we're looking at this quite differently than how we do things normally. Albert says the average hourly earnings has increased. Yeah, 0.3 to 0.4. I think that's still within reasonable limits there. But if we take a look at the year-on-year number, we actually look at the numbers unchanged. So again, as I said, I don't think we're going to be having a huge impact into the market here. All right, the Euro USD, I think I might want to go long on the Euro USD right now, see if it works. But yeah, we're going along on the Euro USD, and our stop loss is going to be below this low here. That's about 27 pips. I think that's reasonable. If you want it to be safe, then I don't really want to push it, any lower than the lows that we have here on the hourly time frame here. But again, if we take a look at it on the 5-minute time frame, this is a really huge whipsaw that you guys can see there. We're trying to go long on this one here. Obviously, we want to go with a 1-to-1 risk reward ratio. So yeah, we want to go for that upper range there if it manages to push up a little bit higher. But it is very choppy. It does seem like there's a lot more buying pressure to the downside. So if you can get a much better price, try to get that a little bit lower there, close to the 1.13. 80 or something like that. All right, dollar yen is currently pushing up a little bit higher. I think this one here, I can start adjusting this just in case, just to compensate with the euro that we had just now. And for the stop loss on the dollar Japanese yen, I would move this now to about 144.25. That the risk reward ratio makes a lot more sense at this point in time. But yeah, this one you need to trail it. Once it crosses back above 144.50, then I think you can start locking it, some of the profits on the dollar Japanese yen. Now, if you take a look at the movement that we have here on the Euro USD and dollar Japanese yen, it's currently hedged, right? It's not a perfect hedge, but if we're looking at the dollar yen and the Euro USD, obviously they're supposed to have a negative correlation. Now, what we just did here is that we went long on the Euro USD and we went long on the dollar yen. One of them is actually going to be correct because the buy right, once everything goes back to normal, they're supposed to have a negative correlation. So we are right now kind of hedged, right? Really depends on which one moves a lot faster. Obviously, there's a huge risk on the Euro USD because on dollar term, per pip movement, it's not equal on the Euro USD and dollar Japanese yen, right? But yeah, not budging on the Euro USD. This is the stop loss that I'm happy to go with. We are looking at about 27 pips on 28 on the Euro USD. Not budging. I'm very happy to leave this there. This is the stop loss for the Euro USD here. And that stop loss is 1.1381. Happy to leave it there. I don't need to adjust it to 80. And the reason for that is because that's already way below the numbers that we have. Now, I think we're looking at a potential fade here. I think market is now switching directions again on the short term. So we'll see what happens here. But I think overall there's a negative push on the euro. I think the sentiment on the market here is that they look at the numbers here and it's actually not that bad of the number on the US dollar. But hey, this is pre-US market open, and if I were to zoom out on the Euro USD and give you the hourly time frame, structurally we're not broken. We didn't create a new low, and that's the reason why we want to have our stop loss here, because by right it's not supposed to go any lower than this area over here, right? That is the idea in terms of the structure that we have here. For the euro to continue to go up, it's not supposed to come down and break that structure. So that's why we have our stop loss there at the low on this hour, because once it goes into the US session, we're not supposed to be breaking a new low. We're not supposed to be breaking the low that we have on this hourly time frame, because if it does that, it will track down a lot lower. We're going to be looking at, that's a potential 30, 50 pips to the downside push. We're not doing that, okay? So we want to trade in the short term, and happy to take the current trades that we have. But I'm not looking at a lot of movement in the market, because if you take a look at the movement on the sterling here, seems like, oh yeah, you know what, short-term time frame, we got that push to the upside, we got that push down, so we might have missed the fade that we have there, but that's completely okay. And if we take a look at it on the 15-minute time frame, you know, it's testing that support trend line that's actually highlighted on the early time frame, where it kind of crosses. Those support trend lines are crossing each other at this point in time. So I'll wait. Structurally, this one here, we're not looking at any change of character developing on the sterling, so I'm not looking at any break of structure on the longer run on the sterling there. Now, if the short-term time frame has pushed down like so, what we're waiting for in the next 15 minutes is that I'm waiting for a potential buy on the sterling. Once we have that potential buy on the sterling as well as on the euro, then, you know, I will trigger it. But at this point in time, I'm just not getting that that indication as of yet. If I take a look at it on a shorter time frame, we are still looking at a lot of whipsaws in the market, right? So we're basically just back in the range. You know, we're going nowhere at this point in time. But once we start the market building up positions, this one might actually, you know, I can't go any lower than the 1 minute time frame, but if you know, you might be able to look at it if you can compile the tick. But I think the lowest that we have here is that this is obviously on a 1 minute time frame. Look, for as long as it doesn't break that stop loss, then it's fine, right? But that's the reason why we have the stop loss, just because if it hits that, then we want to be out of the position and we want to stay out. But if you're looking at a potential into going long on the euro, now is actually not a bad level to go in. But consider this, because of the volatility that happened in the market, if you take a look at the range of price movement here, we're still looking at a potential. If you go long right now, you're coming in at 1.1390 level. That's still about, you know, 10-15 pips, right? But it is a much better risk than the 28 pips that we initially did. Okay, so once I got a little bit of a indication that this is, you know, there are buyers building up, then we might actually go long a little bit. So that's the same indication that we have here on the dollar Japanese yen. And, you know, by all means, I was looking for the market to pull back up a little bit. It actually managed to pull back up to a little bit higher, 144.70. We should have cut it off. Just not looking at any significant long-term drivers happening on the dollar Japanese yen. But, you know, I'm not really, I'm just getting a lot of chops in the market on the 1 minute time frame here. But we'll see what happens, right? So we got our stop loss, we got our take profits. I'm not really too concerned, but for everything else, I need you guys to hang on a little bit. And if you guys are going to be asking about gold at this point in time, I think this one here is a little bit stagnant on gold. The current indication on gold here is that I think we might actually push a little bit lower. So if you are thinking a position on gold, you might want to try to short this for about $1, $2, $3. I think this one here is probably going to be testing 33.50 again. The current indication still points to the downside, but again, we're still not past the first hour, so I need you to be a little bit more on the careful side. You know, looking at the scale of things on gold here, we're not really breaking out any new ranges or anything like that, right? Even if I don't take that top there, and if I take the middle high here, it's still is within that range there. But I think indication on gold here is that this might lead to a little bit of a lower push on gold. So if you want to go short on gold, you know, happy to go short on gold, right? But make sure you have your stop loss, and your stop loss is going to be up there. Obviously, this is going to be you know, quite a big stop loss as well. It is about $20 in terms of stop loss. But yeah, again, always go with a 1-to-1 risk-reward ratio at the very least. So you want to be targeting a move a little bit lower, you know, maybe 33.30, 33.25. I think that's about right. But once we start seeing positive movement on gold, then we want to start moving our stop losses down just to protect our positions there. So this one here is more of a temporary stop loss. You know, this is on the 15-minute time frame, right? And it's supposed to still be maintained by this resistance trend line, but this resistance trend line only applies up to 50 minutes, because if you take a look at it on the hourly time frame, it doesn't have any significant at all, right? So if we take a look at the 15-minute time frame, I think it still points to the downside. But it's, I'm not really looking at any strong push. We have our limits, right? If we want to tighten our stops, and if you think, okay, I don't want to risk that much, then that's fine. You can move your stop loss down a little bit lower, just about this high, but it is going to be pushing it. So, the closest stop loss that you have here is going to be about 33.65 on your stop loss. I think that's probably more of a reasonable stop loss. All right. And that's pretty much it. I'm not looking at a lot of movement here. The Euro USD is starting to push a little bit higher, but no strong confirmation as of yet, whether or not we can start doing anything with that. So yeah, again, as I said, the Euro and the dollar yen is kind of hedged. It's about hedged at about 20 pips now. The Euro USD, see what's going on here, is starting to push back up a little bit, but you can see how the candle is moving right now. It is moving very quickly because sellers are trying to step in on the euro at this point in time. So we have a little bit of a cap happening on the euro. In the short term, you can take a look at the movement here on the 1 minute time frame. You can read what's going on. Sellers are not really letting go of the positions that they have right now, and they're still fighting the buyers, and we just don't have a strong indication of a potential reversal. Yeah, I think again, look, with the volatility that we have here, it's not going to be that significant in all honesty with you guys. A look on the New Zealand. Yeah, we'll take a look at the New Zealand here. And let me just get the New Zealand USD versus New Zealand USD. All right, New Zealand USD hourly time frame still finding a little bit of a support here. I think there's a little bit more pressure here on the New Zealand USD, but you got to look at this and say, look at this and look at one thing here. Let me just zoom out a little bit so you guys can look at a much bigger picture here. I'll hide everything else, but take a look at what's going on here. We just bounced off EMA 100, and then we're still inside the Ishimoku cloud, so there's no really strong indication of any direction. If you take a look at the hourly time frame, it's a really flat doji. We might actually get a doji in 9 minutes time. If it doesn't move anywhere, then we'll probably get a doji on the New Zealand USD. Overall, on New Zealand USD, I think this is still trending to the upside. You might see a little bit of short-term volatility, but again, those numbers that we have just now, it's not going to have a huge long-term impact on this. Post NFP trade, if you take a look at this and the numbers, does it have an impact? I'll be honest with you, I don't think there's a lot of impact. It's not going to disrupt the structure of the market. The data that we have here is not going to do anything. But if Trump says anything stupid again tonight, yeah, then it will, market's probably going to react more to that rather than the labor data that we have here. Now, Euro USD and dollar yen right now, we're just not going anywhere, right? But I think dollar yen is still going to progress a little bit higher, so I'm actually going to close my Euro USD. I don't like the Euro USD. I think we have enough readings that we have here right now that I would now sell the Euro USD. This one here makes a lot more sense, and then I don't risk a lot at this point in time. Happy to have that at about 30 pips. That's completely fine, and I think this one here is still going to progress a little bit lower. We're not able to fade this because we just don't have enough push at this point in time, but looks like the euro might get pressured a little bit lower. So this is kind of the limit that we have here. The number that we have, in terms of maximum take profit level, that would be the low that you have here. Obviously, I'm not going to aim for that low because I don't think that's going to happen, because I think we're going to be looking at a potential for a market to test 1.1375 first, and I think that's going to give me a 1-to-1 risk reward ratio. And my stop loss, you can see what's going on here, is that it's still not higher than the candle that we have from this 1 hour time frame. And the reason is I don't want this position to drag on. I'm not really risking too much, in all honesty. It's 20 pips up, 20 pips down. I think we closed one up just now, about 8 pips down. That's completely fine. Don't take a much bigger risk on this one here, because the numbers that we have just now It's not going to have a long-term impact into the market. But the short-term sentiment on this one here is that leading up to the US Open, we might actually get a potentially stronger US dollar. And people might start thinking, oh, the number's not that bad. You know, it might actually be good for the US dollar. So yeah, gold position as well. You know, those are going to be my stop loss. I'm going to be adjusting it or anything like that. That's the risk I'm willing to take. This is still bound by that resistance trend line, but this is only valid on the 15-minute time frame. So make sure you understand the risk that you have with gold here. As I say, the minimum stop loss that we are looking at here, it is a little bit higher here. The stop loss is going to be at 3,365. It is about $15 on gold here. So just keep that in mind. The currencies are completely fine. I think gold is the one that's really choppy as it is right now. So just be mindful, okay? How about stocks? Because the NFP number is below expectation and there is a revision down from last month with US dollar, would it push the stock up? I think at this point in time, if you take a look at the stock market, obviously it has a little bit of a minus on its own. Now, I think the market tonight is probably going to be looking at how the bromance that goes on with Musk and Trump is going to be. They are obviously slamming each other, and then everyone is just starting to pull back a little bit. But I think there's going to be a potential call from Trump to Musk, but I don't think that is important. I think this is really stupid at this point in time that the whole US economy for every trader is just basically punting on what Trump is going to do. Now Musk is in there. As I say, it has been a circus, and I think this is now more of a stand-up comedy at this point in time. It is really stupid that the market's reacting to that. Now, the market has an impact on the NFP numbers. Again, the NFP number comes in stronger than what the market is expected. I don't think this is actually going to last very long, so just keep that in mind. But hey, again, I could be very wrong, because if you take a look at what the stock market, how choppy that stock market is ever since we closed the month of May. It's been gradually pushing up, but if you can take a look at what's going on here, that's that crash that happened, and it is a lot faster. So I think overall there's a lot of noise. So let me give you the daily time frame here on the US 30. It is pushing up, but we're not creating or breaking any new high. And again, we're just not looking at the potential volume on that. Sorry, this is on the NASDAQ, and the US 30 is actually on a little bit different, right? The recovery here is just midway through, and again, we're not breaking through this resistance here. So it is very choppy, and look, we're closer to the upper range there. So it might go up a little bit, but I don't think it's actually sustainable, because we might be expecting something stupid that happens from what's going on with Trump and Musk. This is really stupid, in all honesty. But it is what it is. Market reacts to it. We'll see how it is. But yeah, do I have a lot to say on the stock market? I probably wouldn't have a lot to say on the stock market. And the reason being is you have to understand one thing. And we got the NFP number, we got the CPI numbers, right? The NFP is completely fine. We got the deadline, which is going to be on Monday. This is for the court, from the Supreme Court in the US, for the Trump government to give them evidence that yes, it is an economic crisis, that they need to implement IEPA so that they can do that tariff stuff. But again, those tariff stuff are going to have a little bit of a limit. So the deadline for those submission is going to be on the 9th of June. Now, obviously, the month of June is actually very important, because then trade deals have to start coming in. Obviously, with how the current situation is, no one knows what's really going on. Is Japan going to create a deal? Look what happened with Japan this week, right? They tried to bypass China's critical mineral. And what happened is China is now just blocking everyone from getting the magnets out of China. If you don't know the scale of things right now, I believe Suzuki has stopped production on their cars, and I'm pretty sure it was Tata Motors in India that has stopped production as well, because China just shut off critical mineral exports. And the mineral that we're talking about is magnets. But yeah, what's the driving force is because the current prime minister in Japan basically goes to Trump and say, hey, you put my tariff down to 0. I'll get those magnets from China to Japan and I'll send it to you. And obviously that shuts everything off. You think China is stupid, but I don't know. It's just comical at this point in time. Obviously, we've got a new president from Korea as well. They're going to be negotiating. They say, look, we can't negotiate. We just got a new president. And where's the trade deals that happens? That's supposed to be from India. That was about 2 weeks ago. Nothing is going on because no country is stupid enough to, go to Trump and say, I'll take your reciprocal tariff here at what, 10%? Bullshit, right? Because if they don't submit the trade deals and they don't make a deal, and they're not going to make the deal until we have a little bit of a clear understanding from the Supreme Court that whatever Trump is doing is legal or isn't even, something that's actually allowed, no one is making the deal. Now, obviously, this is obviously getting ridiculous, and Trump is basically just getting riled up. What's the deal? What's the deal? What's my deal? This is not happening because, I don't know, from a legal standpoint, no one is even sure that it's actually legal. I don't have anything against Trump, but I think the way he creates all this, it's starting to look more like a circus than anything else. Like, all this talk back and forth from yesterday and today from Musk and Trump. Could they be faking it? Could they be manipulating the market? I don't know. At this point in time, we just don't know. We have two positive number, but the dollar seems to be weak, and we don't have a positive number. It is a lower number, even from the revision to the downside. So let me just read the number again for you, right? The non-farm payroll tonight expected to come in at 130,000. Previous number was 170,000. It was revised down to 147,000. The number that came in today was higher than consensus at 139,000, but still lower than last month's number being revised down. So it's not a positive number. Okay, the unemployment rate is actually flat. It's unchanged at 4.2%. Average hourly earnings, as I said, it's not going to have an impact into the market. So what's really going on? How could you say this is a positive number? It's not a positive number, but is the market reacting to it? I'll say, look, the market might react to it in the short term. I'm not holding the position until the long term because whatever that we have right now is not going to have an impact on the long term. So let's be clear on this one here. So if you come here and tell me that, we have two positive numbers, we don't have a positive number. We actually have a weaker number, and it's actually double weak. You know why? Because the previous number that was actually at 170,000 was revised down to 147,000. So that downward revision, and then we have a number that's still lower than that downward revision. The good thing is because what we're looking at here is that people are reacting to this because it is higher than consensus at 130,000. You know why? Because people are basically expecting a much softer numbers here, maybe 120, 110, 115. Those are the current range that we have. So getting 139 is good, but realistically, it's not better than last month's gain, right? So is that positive? I don't think it's positive. Okay. All right. Yeah, so trades are going through okay, right? You can see what's going on here. So, I was just being chill and whatnot. Market is now pushing down a little bit lower now. The Euro USD is starting to start moving in the direction that we have there. Initial break to the downside there happening, and the market did a little bit of a fade. We caught it in reverse position. Right now, we're now in positive territory on the Euro USD. As well as with the dollar Japanese yen, and gold is starting to push down lower as well. Now gold, I need you to be careful because price is currently at 33.49. If it's not able to stay below 33.49 in the next 15 minutes, get out, right? If it starts climbing back up above 33.50, get out, right? So what do we do with gold? You can start moving your stop loss to your break-even level if you want to. But I will lift this there a little bit higher because, I think overall, I still have room for gold to move a little bit lower, right? So we're now in positive territory. I'm going to leave you guys with the trades that we have here. If you guys are looking, hey, what's going on? What's the number? What's the trade? Pause the screen, zoom in, take a look at the trades there. Those are the trades that we have. We have gold, we got euro, we got dollar yen, we got euro USD just now. We closed the position and we reversed it, and that's completely fine. That's okay, End of the day, we're still positive. I think it's a good turnaround, but all these three positions here, try not to bring it to Monday. We don't know what's going to happen over the weekend. As I say, we got a circus in town. A lot of stuff can happen. So don't leave your position hanging until Monday. It's just very risky. So we don't know where the markets are going to gap up or is it going to gap down on Monday. Don't take the risk. Close your position today. Just be happy. If you're happy with the profits that you have right now, please take it and go away. Be done for today. Okay. Don't take any unnecessary risks. As I say, we got a circus in town. Be a little bit more on the careful side. Be smart. Okay. Trade smart. Don't be too aggressive, okay? All right, guys. Let's wrap it up for this week. I'll see you guys on Monday. We got the theory sessions, and then we got CPI numbers on the 11th, which is going to be on Wednesday. All right, stay safe. Have a fantastic